Okay, folks, we are live. Welcome to Sunday Night Futures Live. The futures markets are open. It's only showing that we're flat. This is a gap up. Sure, exactly why the E-minis are showing is flat. This is a pretty measurable move. I know Thinkorswim had an update only a few minutes ago. Maybe something related to that. But a pretty hefty move up here at the open. We closed out the session at around 46.12 thereabouts. We gapped up 46.60. So a pretty big move here at the open. Let's let this settle down and let's go and say hello to folks. Sean, welcome. Hello to the fabulous. Thanks, Mike. Howdy, folks. Always watching the video and Amazon for scalping call options. They're great. They're great for that. Amazon, I think Amazon's more liquid than NVIDIA in terms of the common, but both great for options. Absolutely. You did not get an email notification. Did you mean for the live stream, or did you join up for the service? Let me know. Oh, you just got it. Okay, I just saw your message. Any folks are watching the Bitcoin related stocks? Yeah, they're all hot right now. Good stuff, Vince. Seymour Rivers, thank you, sir, for the audio check. Jeff, welcome. Danny, welcome. Kat, where you been? It's been a while. How you been? Happy holidays. Okay, so let's get to it. We have the futures holding gains here. Let's move on to Trader Isaac. Hello, Bob. Hello, Trader Isaac. Did you have problems with the reset of alerts on Thinkorswim the last few days? Not with alerts. I haven't, but I think the price action here is a little off the way they're measuring it right now. So I think Thinkorswim, they're going to need to do a couple of tweaks. We're certainly up more than 0.02% versus Friday's close. So this is way off. But I'll keep an eye out for the alerts. I only updated 20 minutes ago, not even. The Russell 2000. Look at another big gap up here. We're up spot 13%. I think we're a little bit higher than that too. Dow, big gap up here. I'm getting a strange vibe. Sorry about that. That's one of my, I could have sworn I shut that off. Audio alarm. No, it's off. What's going on? I'm sorry about that noise. Again, it shows is off. All right. Dow moving up higher here. I want to pull back, or I already did, 15-minute view. I mean, this is a powerful move. Let's take a step back and take a look at the E-minis from a 15-minute view. Oh my God. Here, you know what I'm going to do? Edit studies. There we go. Gone. Okay. That should take care of that noise. I mean, good looking chart here. I mean, wow. A little bit blew right through the upper band of the rising uptrend channel. Let's go to a 4-hour view. That's a heck of a gap up. That's a heck of a gap up to the point where I got to question whether or not it's sustainable. We're going to have to do some backing and filling, I think, overnight. Big moves up higher here at the open. Taking a look at where's my NQ. Big up. What's showing is showing we're at the highs of the session, yet it's showing that we're down on a gap up. Something's wrong with Thinkorswim. I don't even know what to think right now. Let's just bring up CNBC. They're not giving me any quotes either. Weird. It's telling me the Dow is unchanged. I mean, this is really strange. Futures are unchanged. S&Ps are unchanged. This is not right. I mean, something's way off here. Unless it just hasn't updated yet. All right, let's go back. We'll deal with the best we can here. Clearly, there's something off with how they're measuring the equity futures. Let's move over to the dollar. The dollar, big move lower here. I mean, we had a really strong close on Friday on the dollar, on the week as well. So we'll see what happens here early on. I think what we need to do is spend a moment and taking a look at the euro yen and see what they're doing. Euro, which did not have a good week last week, is up at the open here. And I'm going to guess the yen is too. That had a pretty good week last week, yet we closed off the highs. And it is up as well. That's forcing the dollar lower. That should put a bid under dollar-sensitive commodity names, in particular gold. We'll go to gold. This time last week when we were going over gold, it was hitting record highs. I saw that. I'm wondering if there's a bigger glitch here across the system. I mean, something's off. I saw that when I had this website up before. All right, so let's go to GC. Spot 43%. I just want 5-minute chart. I mean, gold had a really rough week. I mean, that reversal bar off the highs of the week, excuse me, off the highs of Sunday, that caused a lot of technical damage on gold. And it sold off all week long. So we'll see what the week has to bring. Certainly the US dollar, if it does hold this pullback, is going to help put a bid under gold. But the fact that the dollar was able to rally after having a pretty bearish week the prior week was not good for gold. It looks like the plunge protection team out of DC, they were out there and they were hammering gold futures because they could not let gold rally to all-time highs in a presidential election year, not without a fight. So that would mean that the dollar is tanking, and that does not look good for the president and the Federal Reserve. Let's move on to other names. Let's go to silver. Silver pulled back in kind with gold. Right now, it's up a 1/4 percentage point. Moving on to energy prices. Light sweet crude, a gap down. Yeah, something's off here. This is a 5-minute chart, right? It's 6:10. However, we're on a third bar. It just turns to 6:11. There's something wrong with Thinkorswim. But if we're going to believe these futures, we're down a 1/4 percentage point on the session. Taking a look at nat gas. Actually, you know what? I have home heating oil up here. Home heating oil. Let's take a quick view at a weekly view. A lot of damage done here. Good for me. I got to load up on home heating oil with these lower prices because it looks like they're going to try to break this out. Note to self, fill up at lower prices. Nat gas. Oh my God. Nat gas down nearly 4.5% at the open here. Man, what a bloodbath. Natural gas over the past month and a half has just been annihilated. But we have hit critical support. This may be a washout. I would have to think 2.5 is historical support. We're now down below it. Let's see whether or not we get that, what I like to call a balloon effect, or balloon effect. Like basically when you take a balloon and you submerge it underwater and then you let go, what does it do? It pops right back up. You can do it with a ball as well. So let's see whether or not we get a bounce back here off of these lows on nat gas. Taking a look at commodities. Actually, you know what? Let's go to, before we do that, let's go to VIX. Vol is down. We closed right smack dab at the lows of the week. We're closed at lows not seen in a couple of months. Not good for option selling. So we're looking more in the camp of doing some swing trades. I'm going to go over one in a moment. And another one that we're looking to do, complete contrarian trades. And more to come on that in a little bit. So VIX down. That is obviously bullish for equities. Corn futures. Look at this rip here. Wow. What the heck is going on tonight? Big moves in equities and commodities. Wow. This is a massive move. Let's go to the weekly view. This is not reflective of this week's price action. But wow, what a move here. Wow. Let's continue on. Soybeans. Another move up higher here. Something's going on. Something's going on. Let's see how they closed out the week last week. Pretty weak. Wheat not looking so good. So wheat remains fairly weak. Let's check back in with the equity space for a moment. Still showing we're pretty much flat, yet the price action is not validating that. It's just, frankly, very strange what we're looking at here. So I think what I need to do is put a disclaimer out there and say, check back in later on when the futures update on CNBC, whatever platform you're looking for your futures action at, because the price action here is not lining up with the percentage gain on the session, and that's going for pretty much all the equity indices that we've been looking at so far. So Hopefully they clear this up quickly. All right. Did I miss anything? I don't think I did. Here the E-minis, vol down. NQ now showing flat on a gap up. Look at this. Flat on a massive gap. All right, so I'm not going to waste any more time here. They got to get this fixed. Let's go back to some comments. Bean counter. Hi, Bob. Do you think we could see a rate increase this week with inflation still so hot? No, definitely not. Not at all. Zero probability. We're gonna go over that in a moment. The thing that you know, a lot of people on CNBC, they like to make this a big drama game. Will they raise? Will they won't raise? The answer is always in front of you. When we go over the CME rate Fed Watch tool, if you go back throughout Jay Powell's tenure as Fed chair, he has never, ever, not one single time deviated from what the Fed Watch tool had expected. If they were expecting a pause, it was a pause. If they were expecting a quarter basis point rate hike, that's exactly what they got. He never surprises the market. The only time you see the markets really move on a Fed rate announcement is on the initial announcement, and you have the computers out there scraping the headlines, and they're trading off of it in milliseconds, right? And then you have the presser afterwards, where when I first started trading, there was no press conference, nothing like that. Now you have a press conference, which they drag out, and every once in a while he flubs, and he's gotten a lot more polished than what he used to be. And sometimes the markets take direction from that. But otherwise, no. Right now, the probability of a Federal Reserve rate hike is basically zero. So I would not worry about it. It's always about the forward-looking guidance, and that's what drives the market, forward-looking guidance. You're welcome, Seymour. Anytime, my friend. Thank you. Thank you for the comment. Hey, Bob, an interesting name this week? Yeah, there are. Adobe, I'll be watching. Oracle, not so much. The options there aren't all that fun. They're very illiquid, but Costco is another one. So yeah, it's going to be it's a very quiet week, but those are the names to watch. Has nat gas supply? Yes, it has. That's the problem. So there's a chart. There's a company that I use out there, and it shows you the supply of nat gas, and we're at like 5-year highs on nat gas. That's why I've been hoping for cold weather, but here in New York, it was like 60 degrees today, so no bueno. But it's very cold over in Europe, from what I understand. Denny, yeah, please smash the like button. It helps me out a lot with the YouTube algorithm. They will not let me grow this channel. I mean, I'm shadow banned as hell. So please smash the like button, send a message to them. All right. Let's get to it. So going into the new trading week, we have a PE ratio on the S&P 500 of 31.15. This is rear view mirror stuff, not forward-looking PE. So using reported numbers, we have a very, very expensive market versus a mean of 17. Now, the CME watch tool, this is what I was referencing earlier, for December the 13th, that's our meeting this coming week, there's a 98.4% probability of no hike. We're not getting a hike. 1.6% probability of a hike. If they raise rates this week, you're going to see the market drop like a rock. And I'm sure that Jay Powell's phone is on speed dial to the White House, because you're in a presidential year. We have less than a year to go till the election, and they cannot afford to have the stock market drop. Now, going into January, we have a 94.4% probability of no hike. So don't expect a rate hike then. as we get into March, and this is why you saw a little bit of trepidation on the part of the market on Friday, where we should have had a much stronger rally. The reason why we didn't is that we had over on Thursday night when we last met, we had roughly about a 50% probability. Actually, it was 53. Let me rephrase that. Sorry. We had about a 50% probability of a cut. That dropped down to 45.6. So the probability of a cut dropped, and that's why stocks didn't rally as much as they should have. Now, taking a look at May, the probability of an ease is at 58.1. And as you go out into these forward-looking months, it's like 100% probability of a cut. So the markets are pricing in something that's going to happen. There needs to be something that happens for the Federal Reserve to cut rates. So that's what we worry about. What is that event? And I have an idea. It's probably going to be some nefarious behavior out of Davos, the Davos group, the globalists. What kind of climate change ridiculous nightmare that they're going to try to pull the fire alarm on? I have no idea, but they cannot lose the White House. And God forbid they lose the Senate. Now, looking at economic data coming out this week, we have CPI, that's a consumer price index, very, very important number. On Wednesday, we get the PPI as well. This moved the market last month. We didn't have a big move on the CPI, but we did on the PPI. That's producer price index. That's the level of inflation at the producer level. Then, of course, we get the FOMC rate decision coming out on Wednesday afternoon, and it's always about the pressure. And then on Thursday, retail sales. Friday, Empire State Manufacturing Survey. So this is going to be a very, very busy week for economic data. So buckle up. Expect volatility, which is very low right now, to probably gap up higher some point in time this coming week. Now, in terms of earnings, we kind of had the names already leaked. Oracle coming out after the close on Monday. Adobe after the close on Wednesday. Costco after the close on Thursday. Scholastic is still around. After all these years and the internet. What else do we have here? Okay, so openings. For decades, job openings and in the U.S. and the S&P 500 have been highly correlated. Beginning in 2022, job openings began to move sharply lower. Currently, the S&P 500 and job openings have a wider gap than ever before. And these are just the clues that we look for. You know, we're like that Sherlock Holmes character. We have a magnifying glass out there. We're always looking for clues, right? But you don't want to trade off of it. It's just something to file away. This does not mean you get short on Monday. We're contrarians, but we still respect the trend. So we have a little bit of a deviation between the S&P 500, which continues to drive higher, with job openings trending lower. What are job openings implying? They're implying recession. So what the market is trading off of, this is my rationale, is that they are expecting a rate cut. The problem is history has shown us that on that rate cut, equities don't rally, they fall because they need to get to equilibrium, meaning it's not going to be one rate cut that gets us where we need to be. It's going to be multiple rate cuts and an aggressive Fed to get rates down quickly so that you have a lot of capital flooding into the economy and helping do what? To drive up inflation. So this is just a clue. This does not mean go out and short the market on Monday. What else do we have here? We go over this every Thursday, but these are the commercial banks, and you can see that they are really tightening up credit now. And what does that mean? We did a commentary on this on Thursday night about buy now, pay later. People are maxed out. They have no capital. I have a chart here. It's not what I want. What's going on here? Let me see if I can bring it up on Twitter. Bear with me one moment. We're getting some technical challenges tonight. Here it is. So you have people that have run out of capital. So all that money that was pumped into the system during the COVID scam, that robbed Americans of trillions of dollars, that money's gone now. It's gone. It's spent. It's done. So you have the consumer that has no personal savings left. They're maxed out on their credit cards. What are they doing now? Buy now, pay later. So that's the new scam that the banks are pulling on us. So these are all indicators of what happens immediately before a recession. Because a lot of people have you believe that yields are historically high. They're not. When you take a look at mortgage rates going back to the 1970s, back then we had mortgage rates up at 18, nearly 20%. And right now, we're at what? 4.5%. And technically we're higher than that, but the average right now is about 4.5%. And the reason why people can't afford houses is a couple of reasons. One, you've had people that bought houses that have very, very cheap mortgage rates, and they don't want to let them go. Two, inflation generated by what? By the central bank flooding the system with money, the government spending more capital than what they have, and they're robbing the savings of people because they need to put gasoline in their cars. They can't save up. They have credit card debt. They have student debt in the hundreds of thousands of dollars. So where 20 years ago they would be out there buying homes, saving and buying homes in a normal environment with wage growth keeping up with inflation and outpacing inflation, you don't have that anymore. That's gone. So you can't blame the current rise in interest rates on the reason why people can't buy a home. It's the fact that inflation is so hot out there and wage growth has not kept up. What the Federal Reserve has done is wiped out the middle class by pumping so much money into the economy, driving up asset prices for not the 1%. Yes, greatly for the 1%, but really for the 10%. The 10% own equities. They own real estate, and they've benefited by this drive up in the money supply. Now, the lower rung, they don't have any assets. They're living paycheck to paycheck. So they're being bled dry due to the fact that, and unfortunately, that goes for younger people. They don't have any assets yet. They're just getting into the system, and they're being robbed as we speak. And get ready for more of it. So usually I put this at the very beginning, but we're at war. I don't know if people really appreciate, and this may sound hyperbolic, but I truly mean what I say, that we are at war. We have a globalist group out there that is trying very, very desperately to seize control. You have the World Health Organization that's trying to take control over anything that has to do with a health crisis at their whim, whatever they deem in the United States and Europe, wherever they have any influence at their whim. They say when a crisis has occurred and what governments need to do to get that pox or disease under control. And these are the most corrupt despots in the world. Then you have your globalists like Henry Kissinger, who's now dead. They're trying to drive the farmers off their own land over in Europe. They're trying to make sure that you're going to be eating lab-grown meat, a la Bill Gates, who's invested in that business. So we're at war. The COVID grift, you saw them shut down our economy without 1 ounce of fact behind why they did it. They didn't even do that during the smallpox or the Spanish plague back during World War I. It did help to end World War I, but we're under siege right now. That's why you're seeing Donald Trump, whether you like him, you hate him, you gotta respect people's freedom of speech. And the fact that they're denying him a platform right now, keeping him in a courthouse so he can't campaign, speaks volumes of how much they fear this guy, and rightly so, because hopefully if he does get back in, he is going to rip their you-know-what off and seek some payback. So here is this demon, this Bond villain, our former VP, Al Gore. And here's what he has to say about the freedom of speech in the United States.
To one based on broadcasting and then moving on to the internet and to social media has disrupted the balances that used to exist that made representative democracy work much better. Because a free self-governing people rely on a of knowledge that serves as a basis for reasoning together collectively. But if you have social media that is dominated by algorithms that pull people down these rabbit holes that are a bit like pitcher plants, these algorithms, they are the digital equivalent of AR-15s. They ought to be banned. They really ought to be banned. It's an abuse of the public forum. But when people are pulled down these rabbit holes, you know what's at the bottom of the rabbit hole? That's where the echo chamber is. And if you spend too much time in the echo chamber, what's weaponized is another form of AI, not artificial intelligence, artificial insanity. I'm serious.
So what was cut out of this right before is that what he wanted you to read were the newspapers. What he wanted you to watch were the cable channels. They control those domains. They're okay with Facebook. They're okay with Instagram. They're okay with TikTok, to be honest with you. What they're not okay is with Twitter, because that's too much free speech. You can't have that kind of free speech, and because they can't control it. They did during the 2020 election because they had the FBI inside, literally inside of Twitter offices. Now they can't control it, and they're freaking out about it. And add to that, and I was listening to a live stream. You have Alex Jones is now back on Twitter, and there was a really interesting. I'm sure you'll see the replay of the live stream with Alex Jones, Elon Musk, Andrew Tate, Mark Dice, who's a commentator, reporter, and a whole bunch of Jack Posobiec, a lot of big names out there. And you had Vivek Ramaswamy on, Matt Gaetz, Congressman Matt Gaetz, and these are all free speech type of guys. And they're saying General Flynn was on there as well. They're saying what needs to get said. These people, these demons in Davos, need to get called out for who they are, and they're the enemy. They need to get called out and at least debate their opinions. They won't debate their opinions or their plans for the globe because nobody wants them. Nobody wants them. So good news on the front of one score for the people, getting a voice back. That, yes, he's a little bit insane, but you got to like Alex Jones. All right, let's talk about the markets here a little bit. Let's go to comments. Could someone give me the correct contract symbol for ES? I'm gonna let somebody else do that. I'm gonna keep the show going. Hey, Talon, thanks, brother. Bob loves his Beyond Steak. Yeah, yeah. I was in Whole Foods a couple of weeks ago, and I passed by this refrigerated section that they had, and it was all chemical meats, fake meats, and it looks good on the packages. But then you take a look at what's in the ingredients. It's like, oh my god, oh my god, what you're eating is it's pure chemicals. It's not food. It's chemicals, and it can't be good for you. Your body's not designed to absorb that stuff. So it's crazy. It's crazy what they want you to do now. Yeah, they want that's what they want. That's their biggest fear. Sunlight is the best disinfectant, and the last thing that these globalists want is sunlight. Ben Rhodes, Obama's speechwriter, mentioned echo chambers. All right. As long as it's their echo chamber, they're good with. If it's an adverse opinion, they can't have that. All right. I didn't go over this with numbers yesterday, and it really goes to the soybean oils. All those oils are just horrible. Coconut oil is good. Olive oil is good. Avocado oil, very, very good. I don't eat anything with these. I'll try not to eat anything with these industrial oils anymore, but every once in a while it slips through. You can't avoid it. It's so prevalent. When I was over in Europe, you rarely saw it. At least in Italy. Italy was great about it. France, to a lesser extent, was good about it. All right, let's talk about the yield curve, a weekly time frame. We broke support last week on the yield curve. That means that this equity rally has legs. You may be saying, wait a minute, doesn't that mean that we're probably heading towards recession? We have an inverted yield curve? Yeah, it does. But as long as it's declining, equities can still rally. So the position that we've had for the past several weeks that we're bullish on the equity markets remains unchanged going into the new trading week. So it may sound odd about what I'm going to talk about, a couple of our contrarian trades, but my two top favorite trades going into the new trading week are shorts. And, a lot of people, not a lot of people, a couple of people over the course of the past couple of years say that, you're not a contrarian because you're following the trend. You can't go through life with blinders on and take a word contrarian and say, okay, every time the market goes up, I need to be negative on the market. That's ridiculous. History has shown if you ignore the trend, you're going to get wiped out. You're going to get wiped out. Your career is going to be short-lived. Now, when you want to be contrarian is when something is, as I like to call it, unsustainable. It's unsustainable. Historically speaking, unsustainable. So 2 trades, one I'm already in. We added our opening position on Friday afternoon. And that's with a chart of GoDaddy, which appeared on our radar screen as being an extreme, look at this, another glitch tonight, extreme overbought stock. And it hit a high last week of RSI of 92. And then when I was looking at it on Friday, I noted that it had pulled back off the high, yet they're still closing it up on higher highs. That is a bearish divergence, meaning we're now putting in higher closing highs on GoDaddy, yet RSI is putting in lower highs. That is, again, I'm the Sherlock Holmes character. I'm looking at the chart. I've got my magnifying glass out. I'm saying, okay, that's a clue. That's a good clue. Do I want to go jumping in with both feet? No, I'm bullish on the market. What if they jack the market up higher tomorrow and they take GoDaddy with it? I could have my face ripped off because strong stocks tend to get stronger. So you want to leg into the trade, and you never, ever, ever, ever want to open up a position or add to your position on if you're trying to short it, on a gap down in the morning. Never, ever. That is the worst thing you could possibly do. It sounds counterintuitive, but trust me, I've been doing this a long time. And sometimes if you get a gap down on an overbought stock, all you're going to get is buying and lifting it. And the minute that you make new daily higher highs, the shorts move in and they cover their positions. The longs move in and they buy on that new higher high. And it's just a self-fulfilling prophecy. Rinse, wash, repeat. Gap down, rip up higher. But then the day comes where you gap down and you stay down. And the shorts lean in and they lean in hard. And profit takers, they take their money off the table. And the correction is pretty brutal in the first days, usually 3 long down candlesticks. So we also have our stochastics rolling over. They have put in, while we have put in a new higher high, we have a breakdown on stochastics to lower lows. That's clue number 2. On a price action basis, what we're doing here on GoDaddy is, while we have 2 back-to-back up days on Thursday and Friday, and on a closing basis, we're making new higher highs, we have been unable to take out the highs of Wednesday. So in essence, what the market has told us is that you have resistance right at that 105.47 mark on GoDaddy. So that's another clue that we're getting a little bit tired here because we're not able to put in new higher highs. But why didn't I go jumping in? And let's say I want to put on 15 contracts of puts. Why didn't I just go buying those 15 contracts? Because it's foolhardy. It's the wrong thing to do. Because this could just be a consolidation and getting ready for a rip up higher. I don't know. It's anyone's guess at this point. But again, stocks tend to get stronger. Weak stocks tend to get weaker. We always enter these types of trades with the assumption that our first round of buying is going to be incorrect. If you do that with that attitude of being very, very humble, you have all the reasons in the world to be negative on the stock, yet you're not jumping in with both feet. That will keep you liquid. That will keep you safe. And if you need to add more, this is the only time I really advocate to average into a trade. If you're shorting, average in on higher highs. And I wouldn't go short. I wouldn't go leaning in to the short side on a break. It's just not what I do. Now that's a matter of argument. And I respect anybody's opinion when it comes down to that. This is just my style. Now, looking at volume, you want to make sure that volume has dropped off. You can see we had very, very good volume for the past several weeks. And that's beginning to die down a little bit. ADX, very, very overbought. MACD, very, very extended here. And the key is really that you want to make sure that on a monthly basis that you have resistance above. And if you don't, which we don't here, that you are very extended and you're seeing really weak price action on the lower time frame. So what do we have here? On a monthly chart, we have GoDaddy leaning into current. On the close on Friday, the monthly third standard deviation Bollinger Band in red. On a weekly chart, we are well above the 2 standard deviation, and we were kissing the 3 standard deviation Bollinger Band. We're not supposed to be here. So GoDaddy, very, very extended. Volume on a weekly time frame is still pretty good, but I think that this week we're going to see a measurable correction in GoDaddy. And I stand at the ready. If we do put a new higher high and we see a bearish reversal bar, bearish key reversal, bearish engulfing bar, we'll add more to the trade. And if you're wondering about that terminology, I have a 5-part video tutorial, my top 5 favorite candlestick patterns below. And I also have a listogram, an infographic link below on how you manage these trades, how you enter them free of charge. Link below, take advantage of them. Now, the next chart I want to talk about, Talon. Australia is arresting anyone who questions the government, and Canada is freezing bank accounts. They want that here. Yeah, this is a global attack. These people are bought and paid for. I mean, Kamala Harris came into the VP role like $3 million of net. Oh my God, I don't know this. Wealth, $3 million of wealth. Now she's worth like $29 million. So in the course of 3 years, where did she get that money from? Biden. We all know about Biden. Now the news media is reporting on Hunter Biden and all of his misdeeds with China, getting paid by China. And China is all behind this. They want the China model for here. How did these people get so wealthy? It's because the media won't report on it. The IRS won't audit them. The FBI's had the goods on them for years, yet they do nothing. This is all an attack. It's an attack. It's crazy, but it's for real. And people need to wake up and understand what's going on here. Now, the other chart we're looking at, let me finish comments. Battalion, yeah, you're right. I saw a video on Twitter. As a matter of fact, I'm so hot on this right now. I'm scared for my kids. Me, I don't care too much. I'll be dead, by the time this all goes down. But my kids, that's a different story. Let me see if I have this here. I think I just may have commented on it. And I didn't retweet it. Yeah, I didn't save it. Oh, here it is. I do have it. This is pretty brief, I believe. This knucklehead. She has no idea what she's saying. Let me make sure the volume is up. All right, let's hear what this idiot has to say.
We've got other specialist teams involved, like our COVID online team. We do investigate and monitor people who demonstrate and we know show concerning behaviour. If there's anybody out there that knows of someone that might be showing concerning behaviour.
All right, so concerning behavior is what I'm doing right now. What you're supposed to do, because Robert Desmond, the contrarian trader, is on YouTube saying, this is a grift, this is an attack. You need to report me. You got to go to the FBI and report me to make sure that I'm mentored, that I'm handled, that I'm managed.
Around, conspiracy theories, anti-government, anti-police, conspiracy theories around COVID.
I'm not anti-police. You're not a cop. This is not a propagandist. This is the Gestapo.
19 vaccination, as what we're seeing with the Train family, we'd want to know about. We want to know about
I'm
that.
sure you do.
And you can either contact police directly or go through Crime Stoppers. But we are certainly not classing it as a domestic terror event. At this point, there's nothing really to indicate that. What we can see is sentiment displayed by the three individuals, the three Train family members, that appears anti-government, anti-police, conspiracy theories.
I don't need to play this
things.
So you get my drift here. We're under attack by our own government, no less. Okay, the other chart I want to talk about that's a setup, but not yet. I want to repeat, not yet, is Boeing. Oh, before I move on here, let me go back to GoDaddy. There's something very, very important that I learned, and I learned it the hard way. I made money on a trade ultimately, but I put way too much capital into it to make money on it, and I made too little money for the risk that I put on. And that was a short I did of FIZZ. And this is a number of years ago now. I think the RSI went up to like 99, some ridiculous number like that. And let me see if I can bring up the chart. Let's go back 10 years. We can always drill down. Yeah, back here. So back in 17, look at this RSI. We were at a high around let's call it just shy of 95 on RSI. So I began shorting it way up here. I knew it was a small cap, and they can get extremely oversold and extremely more so than an S&P 500 stock. And I also knew that this was a hot stock at the time. So I started shorting it using put options, long put options, and it kept going up, kept going up. I said, I'm missing something here. I'm missing something here. And so what I did is I went over to Yahoo Finance. I knew that there was a large short interest, but that they had been beaten to death already. So that wasn't it. But what the problem was that management owned a massive amount of the stock. So what you always want to do before you get into these trades, especially if you're shorting, is go in and take a look at the shares outstanding. Okay, take note of that. In this case here with Fizz, National Beverage, the shares outstanding were, let's say, 93 million. But the float was only 23 million. So you had very, very few shares out there, roughly 25% of the shares that were outstanding that were being traded. So little was I aware. I didn't do my homework here. It was a lesson learned the hard way. But always don't short thinly traded stocks. If you have a thin float out there, avoid them like the plague. You never know whether or not the management has hired a firm out there, a brokerage firm, help us squeeze the shorts out of our stocks so we could sell some. You don't know what you're dealing with. What I prefer to short are stocks that you don't have a lot of management ownership. So when you take a look at GoDaddy, which I've already done here, is that what you have is shares outstanding, 140, nearly 141 million shares. Of that, you have the float. Most of those shares are being traded on the open market. So you don't have an inside group of elites, if you want to call them, that are going to manipulate the stock. And you have plenty of shares out there that could be traded on the open market. So I'm not worried about the same situation I got into with Fizz a number of years ago, 2017. So that's that concern. I wanted to touch upon that because that's critical information. Oh, look who it is. Jody, welcome. Starting with major supply and demand zones on a daily, weekly chart where the big boys, yes, always go with the trend. So the next chart I want to go over, and then we'll do some chart requests. The next chart I want to go over is Boeing. Now, Boeing, RSI of 87.66, which makes it very, very attractive to me. Does that mean I want to go shorting it tomorrow? I mean, how is this sustainable? It's sustainable. It's in play. It's under accumulation. This is sustainable for a few more days. So by no stretch of the imagination am I trying to say that I'm going to go shorting Boeing tomorrow at the open. I am not. Boeing managed to put in a new 52-week high on Friday. Its volume on the day was very, very good. So what this is telling me, you have 3 sequential up days, rising sequential. I don't short that. I'll short it with up volume that's declining and moving below average at a resistance level, but we resistance on Friday. Therefore, we may get a pullback on Monday and do a retest of 243.10. I think it's a buy. I think you're going to probably get a move up higher, assuming that the market holds in and remains strong. So why do I not want to buy it right here, right now? Well, the reason is for A, the volume is still too strong. B, monthly chart. You know what? Let me go back here. Let me use my annotated chart. We broke out last week. We may have some resistance here at 263.50, but ideally they get this up to 78. I don't think they're going to be able to do it. So my first price target before I want to short this is 263.50. That's still quite a ways away from where we're at right now. So some time. And if and when it does get up there, we'll look to lean into the short side. Let's take a chart. Yeah, here's a breakout. So we have more room to run here, but Boeing is another one that we're going to be looking to short in the next few trading days. And again, I put a listogram down below, an infographic down below. I created it myself. It's free. Keep it at your side. It helps when you want to short a stock or buy a stock that's at extreme levels. When I define an extreme level on an S&P 5 stock, RSI is greater than 85. On a small cap stock, that stock could be trading up with RSI above 90 or below 10. So much different dynamic when it comes down to small cap stocks versus large cap S&P stock. Got to be handled completely different. The entry method is the same, but you need to wait for much greater extremes on the share price. So that is Boeing. And let's just take a quick look. Obviously, there's going to be plenty of shares out there to short. And we'll be using put options. Shares outstanding, 604 million. Of that, most of these shares are being traded. So clearly a great stock to short. But when we hit historical resistance, we're not there yet. We broke out on Friday. The path of least resistance remains higher going into tomorrow. You got it, Sean. Mike. Yeah. It's Mike. It's so cool. I'm telling you, I didn't know it. I've been using this style for a number of years, and my profits on these trades are very, very high. My win loss ratio is very, very high, and I knew that after you do it for a while, you know that usually the first time you start adding to the position, you're probably going to be wrong, but you leg into the trade. But this one here, I was just ripping my face off, and I ultimately figured it out. That tool helped me out. So if you learn from it, awesome. Glad I could help. All right, so we have of our members, they have 3M as a stock they want us to watch. There's another one that's out there. We did Boeing already. Jody always has one. Jody, what is yours? And then we're going to log off and get ready for the new trading day. Folks are going to be using TrendSpider. I was on a meeting with them today, working with this here on a back testing of some strategies that we're working on. So more to come on this in the future. I had a long conference call with them today, and the guy was a whiz with the back testing. Okay. ARM. You got it. Talon. Bob, are you worried about the blow off top on gold? Yeah. I covered it earlier, Talon, but it's worth revisiting. When we opened up the futures action earlier, gold was up about just shy of a 0.5 percentage point. Let's see if we've gained. We're about the same as where we were. To answer your question, yeah, I am concerned about it. Look at this perfect head and shoulders setup. Left shoulder, head, right shoulder, neckline, broken. So am I a buyer here? Not yet. I think this needs to play out. And I think that what will help put a bid under gold is a rise in oil and a rise in food prices. Energy came in last week, as did food prices. But early on in this trading session, oil continued lower. We're off the lows of the session. We've rallied. Now we're unchanged. That's good to see. Nat gas was down big. Still down big. I think this is a washout here on nat gas. So, yeah, am I concerned? Yeah, I think that we need to see the dollar break, because if you have food prices coming in and you have energy prices coming in with the dollar rising, that is disinflation. You still have inflation in other areas, but you have food prices coming in, energy prices coming in. So the rate of inflation is declining a little bit, which is good, but not for gold traders. So the dollar is off of its lows, but still down on the session. No, it's now it's session lows. Sorry about that. And now it's session low. So yeah, I'm not a buyer of gold right now. We're going to let this correction play out. We'll see if oil catches a bid, if nat gas catches a bid. Food prices appear to a bid earlier. The question is, we're looking at 5-minute charts on a weekly time frame. They're still in a lot of trouble. But corn, an amazing open here, if you could believe this move up. Soybeans were up as well. Yet wheat is now flat. It was down, now flat. So I'm not a buyer of gold right now. I did not add to the gold mining trade on the pullback, as you know. So, but we'll watch it closely, as we always do. All right, so let's take a look at MMM. Let's go to a weekly view. I was bullish on 3M, I don't know, a week or so ago. And we were below $100. Now we are well above $100. I even talked about selling puts here. I should have done that. So 3M looking very, very good. I think what may happen here, Sean, is that we may get a retrace back down to 101 on the button. Okay, so we're good to go. Let's keep a little bit of sensitivity, and we're good. You're welcome, Sean, of course. Daily view. All right, so we may get that retest, Sean, because what we have here is, let's go to a 1, is a bit of a dilemma for 3M. Now, on Friday, it flashed a bearish reversal bar. So what we'd be looking for is a break of this support level. I don't want any sensitivity. Let's get this off. We want to see it close below that support level. And we maybe even be able to scalp it for a short, or there's not a lot of meat here. Maybe even sell calls against it, then sell puts at 101, creating a strangle. We could do a bunch of things. All right, so our alert is set. We're good to go here. Now, 3M could easily break out. We have the futures that are strong. See if CNBC futures here, because I'm not trusting what I'm seeing on Thinkorswim right now. Yeah, I think Thinkorswim is being overly optimistic with the price move. Showing the Dow up 20 points. S&Ps up 2 3/4 points. This one is really broken right now. All right, so what we could also be seeing here is a breakout above resistance at 103.75. If we break out above that mark and we close there, that's what's key. We close there, we're heading up here to just shy of 107, 106.42. When I did that screen share today, they made me shut down all of my indicators. VWAP. Yeah, nice breakout on the fractal trend lines. And for whatever reason, oh, here we go. Okay, good. All right, so we do have a little bit of resistance up here at 104.22, Sean, and that's where they reversed it. So the buy price indicator, I love this indicator. It's just telling you have a resistance level up here. Now, if they close it above 104.25, they're going to take it up to this resistance up at 106.89, give or take a dime. All right, next chart up, Tesla. I think Tesla's breaking. So Tesla's been struggling of late, trying to break out and above really this resistance level here. Ugh. I can't delete these other lines here. What is this? 245.21. It's been through it. It just can't hold it. I think if we get a break and a close above 245.21, Tesla's going a lot higher. Let's check out the weekly view. Let's get these drawings off. And you can see, you know, the weekly chart, I'm not as bullish on Tesla on. I got to be honest with you, because we broke down here in October. I kind of forgot about this. And we've been trying to, we've been trying to recapture support for quite a while, but we have all this resistance, 245.21. We need to close above it to get this resolved. I mean, this is a breakdown, then a rally it back. It's had a lot of resistance above. So we'll keep an eye on it. We may be long of Tesla. What I'm thinking about doing, I wanted to do a covered call strategy with Nugget, NUGT. I may do that if the shares are assigned to us, but I may do the same with Tesla. If we get a breakout, I may sell puts on Tesla. I don't want to sell puts now on Tesla, because if this is a breakdown and we do sell off on Tesla, I don't want to be short puts. So I want to see a breakout on Tesla, then I'll sell puts. If the shares are assigned to us, then we'll go with a very tight covered call strategy, and we'll play it that way, because I do think the market's going to continue to move up higher. Welcome, Sean. Anytime, pal. All right, last chart up, ARM for the lovely Jody. ARM Holdings. Not a lot of data here. A very good chart. I mean, it's doing exactly what you want it to do. Higher lows, higher highs, all that good stuff. It broke out last week. Watch for a potential retrace of 63.80. Give yourself a little bit of room there. A little bit of sensitivity on a retest. Daily view. A beautiful chart, but I think after this consolidation, I think traders are going to want a validation that this is a healthy breakout, and it may just be a retest of even excuse me, 64. I have Tesla on the back of my mind. $64.69, give or take a dime, between that mark and 64.47. Within that range, I'd be okay with entering the trade, and then after we bounce off of these support levels, then start adding more. And then once you get above recent highs, then you're going to get shorts covering. I don't know what the short interest is here, but you could get a nice continuation breakout, assuming that the market continues up higher, which I think it's going to. All right, folks, thanks for being here. And please hit the like, subscribe button. Don't forget about the listogram below on entering these extreme trades and my 5-part video tutorial, my top 5 favorite candlestick patterns. Link below. Talk to you soon. Have a profitable trading week. Be well. Take care, Mike.